I want to start off with you talking about what Courtney was just talking about, the changes in accounting and the way that the tariff costs could show up. Is that something that you're looking at as an analyst and kind of digging into the numbers?
Sure, absolutely. And it is something that will show up this quarter. In particular, when Walmart reports on Thursday, their gross margins are going to look really good because of this RIM accounting method. Importantly, though, Walmart has talked about that already, so it shouldn't be a surprise. It's not like they're trying to do something to trick investors into thinking their gross margins are better. They have said upfront, expect better gross margins simply because of this accounting. We do think it'll reverse over time, so it's simply just a timing type of thing. But expect a better gross margin from Walmart on Thursday because of this accounting method.
But just in all fairness, you're an analyst that knows that there's this change and other companies may make the change. So do you go then and reconfigure their margin for previous quarters so you can see if there's expansion or contraction?
It's more like we understand that margins were up, but we understand the reason, and we don't project that going forward. In fact, again, we'll probably project it to come back down a little bit. So we won't get overly excited about a great gross margin performance in the second quarter, understanding that a lot of it is simply accounting. And again, it is going to reverse in the coming quarters.
All right, let's get into this earnings season. A lot of big name retailers reporting their earnings coming up this week. Walmart, Home Depot, Lowe's. When we're looking at these names, you say, according to your most recent research, defensive names are doing better than discretionary names. You name companies like Dollar General, O'Reilly Auto, used parts seller. Walmart's in there as well. What is it about these defensive names? Is there one theme that investors should be looking for that could help them continue their outperformance?
Well, consumers are still spending. Retail sales have actually been really strong. We saw that on Friday. We've actually seen it all year. The consumer is spending, but they're spending on needs rather than wants. There's some discretionary names like Ulta that are doing better, but for the most part, it's spending on needs. So we're seeing outperformance, as you said, on the auto parts retailers, grocery retailers, Kroger, grocery outlet, Sprouts. The clubs are doing very well. BJ's has been a leader. Walmart, of course. Even a name like Tractor Supply, which is sort of like a grocery store for animals, doing well.
Right.
So it is those defensive names selling the needs rather than the wants that are doing well, both in terms of their businesses and then also the stock prices following that.
So, Michael, you kind of took the words out of my mouth. A lot of your defensive names are kind of focused on the grocery business. Walmart's obviously the nation's biggest grocer. And even the auto parts, while it's not groceries, like you just can't get to work unless you have some of those parts. So, like, they're absolute things that you have to have. I want to go to some of the outperformers on the discretionary side. You mentioned one of them, Ulta Beauty, Urban Outfitters, Williams & Sonoma. Great businesses. I'm not knocking them, but they don't sell anything that you actually need. So what's behind the outperformance of them?
Sure. Each is a little idiosyncratic and things that are going on in their industries. For instance, Ulta, one of our top picks for the year. What they're seeing is just a little bit of an alleviation in the competitive situation. They were hit last year by Sephora opening a lot of stores in the U.S. They've sort of cycled through that now. And so they're coming out the other side. And so their sales have gotten better as they've absorbed that competition. But for each one, it's a little bit idiosyncratic. Again, that being said, for the most part, we are sticking with the defensive names. We track 12 defensive retailers, what we think of as being defensive. 10 have outperformed the market. One thing that's really interesting, one that has not outperformed the market year to date is Costco. Costco stock is up about 7%. Not a bad move, but less than the S&P 500.